Kind of a run and gun video today. I just wanted to make sure I actually put a video out. As you guys probably can tell, I have not posted in a bit, but we're going to get back on this train and make sure we are discussing all the things we need to be. So today, I feel like I finally patched the biggest hole in my trading game. So what is that? So I felt like for the last couple years that I did really well during good conditions. And when the market started to kind of slow down, let's look at like the daily or let's look at the hourly. When the market kind of started to slow down, I typically do very poorly. And I don't think that's uncommon. I feel like if conditions tighten up, a lot of day traders also suffer. So, we can see here that let's say in this time period, I know I was losing money. This is just like a couple weeks ago, literally. But I know I was losing money because we're moving very sideways, right? Range, 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 pop, range, 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 pop. It's not easy to trade. So I decided to take a step back and say, wait a minute. If I know that's my biggest problem, what am I going to do to counteract all that? Well, for one, you have to start with charting very effectively and saying, this goes back to the trend analysis. What stage of the trend are we in? And that goes for all time frames. I know I'm moving fast, but just stick with me because it's very, very important. So if we could see that, look at July. Actually, this is May. Let's go over here. If we look at July, we can see that it was just zombie style buying up, just kind of like wading up higher and higher and higher, but it wasn't very trendy, right? If we go to June, look at here, like mid to late June, boom, nice, decisive. And I promise you guys, I made a lot of money right here. I was passing in funded accounts, I was making money. It was great. As soon as we started to slow down, that's when I started to slow down and started to turn around and just have consistent red days. Okay, so it's like I said, it's part of the trend analysis to look at what stage of the trend are we in. So clearly we can see that there are trending stages, there's pullbacks, there's continuation, but sometimes the trend itself may not be very expansive. You can see it was expansive here in June, but over the course of July, the trend was very slow. Sellers were very present, as you can see through these bars on the days. These are all red days, by the way. They were very present in July, and the red days were more significant than the green days, as you can see. And then here in August, we're just volatile, right? The point is, as I started to realize that, I said, okay, if I know consolidation is my biggest enemy, what am I doing to stay out of it? And I realized that I wasn't doing nearly enough. I realized that it was very important to do something like this. Look at pre-market right here, and we can see there's a clear range, right? I have these zones marked out as like demand and supply, but overall we can see that Qs were ranging between 571 and 570. This is an example. If I zoom in, what I need to do is stay out, essentially establish a no trade zone, and say anywhere within this range, I can expect to find difficulty trading anything. And so that's what's starting to play out. So we see here today, it was a trickier day. We just bought straight through that range high, and there was never really a retest. But there was a nice lower high right here that you could have caught. I personally didn't catch it because you can scale this exact same idea up. Look at this high and look at this low. We were within this range, right? It's not a traditional sideways range, but you can see it was a downtrend that did not trade very cleanly, and it's something that I just didn't want to take part in. So I actually wanted to take longs above this area, right? And so that opportunity really didn't come in a clean fashion and didn't do much. I was able to catch, if anything, I caught head and shoulder shorts because using that range to my advantage, I see, okay, we're failing this high. We, at this point of the day, we had established, right? We established this high, this higher high, but we could not crack up into here. So I'm really starting to see everything as like zones and ranges, and it's really starting to help me stay in and out of position. So I stayed out of longs until we made any real attempt above previous highs. But then I got into shorts and was confident in my shorts, which I caught right here, all the way down here, because I saw, wait a minute, we're setting a high right here, right? Like I said, typical head and shoulders play, but I can see that this was its own range, this was its own range, you know what I mean? And this right here became its own range. Let me like draw that rectangle for you guys. Like this was its own range right here. And I was like, okay, I can take advantage of this, right? Because if we're not going to trade within this range, right? If we're going to stay squarely below it, then that must mean that if we're resisting, I can take positions down here. So that was pretty cool. It worked out. Another key thing is the quality of my entries, right? So to this particular chart, I actually struggled with a lot until this big drop. I made everything back and then some on this big drop, but I did get chopped up into here, and I was just trading shorts. But what was the issue was that, one, I mean, you can see it, it's not a very clean chart. And why is it not clean? It's because there's so much overlap when we're trying to make continuation plays. So you have this range, right? Then you have this range down here, and then you have this third range, right? And if we're looking at all of these, I know it's all the same color, but if we're looking at all of these, it's hard to trade because when you get it, let's say you get an entry right here, you're expecting the continuation, but because of this 3-bar overlap, you get boom. You know, like this price is agreed upon if it's doing all that overlapping, if it's doing all that consolidation. That means it's a fair price, which means they need to test higher before they can go lower. And you can see that being very present time and time again. Here is overlap, 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 overlap for like, what is this, like 10, this right here is like over more than 10 minutes, 15 minutes. What happens? We have to push up before going lower because that consolidation has to be broken. So the point I'm trying to make here is the quality of my entries has to have minimal overlap. I think this is a really good entry right here. I believe I actually took this trade. So you see we have a big move up, consolidation, consolidation. Nice doji, still a little bit too much overlap, but guess what? We have this low to fill. And that generates enough momentum to take us down a few bars. And so that's when you start to seeing the movement, cleaner movement than anything like this, right? That could be obvious to some people. It could be obvious to other people, or not obvious to some. And that sometimes that person is me, right? I could be either one of those people sometimes. But the point is that now 2 hard rules in my system is going to be very focused on staying outside of anything of any outside of any key ranges, any key levels, trading the expansion. I want to stay clear of compression because look at this. You have this horrible downtrend, and then all we do is range in the middle of it overnight. It's hard to squeeze anything good out of that. Here's a previous day high, so we can draw a level right here. Let's just draw the level so you guys can see it. Right? Here's our previous day high. And then I'll draw a rectangle to kind of show like the zone that helps guide what we're looking at. And then we'll do this. So let's take a look at this. If this is the area that we want to wait to clear and accept before longs, we never really get good follow through. And so I never really get a good reason to try it. But we did get these failures, right? And so the point of all this is that staying clear of consolidation, both on big picture moves and little picture moves, right? I want to stay clear of consolidation in my entries, and I want to stay clear of consolidation on higher time frames, right? Because if I zoom out to these hourly charts, you really don't want to trade. You don't want to be too aggressive inside of here whatsoever, right? If I zoom out, where you can look at, look at this. You really don't want to trade, and the proof is in the pudding, because if you have a range, you can see the intraday action. You can see the intraday action is very slow, very very consolidatory. No, directionless. Here it drops a little bit, but you have all these bottom wicks. You don't get much. You have to wait until price is an expansion area to really get anything going. So we can see here, you know, we cleared, and then we had to really sell through this range with momentum before we made a move overnight. And sometimes, you know, it's unfortunate. Sometimes moves happen overnight, but this would have been a nice intraday trade. But it still sets up for intraday moves because you come down now that you're in this expansion area, you can expect volatility because you're out of the, you've cleared it. You know, now we go into this range. What do? We hold down here, right? But then overnight we get that buying back into where? Back into yes, an upper range, but at least we're volatile. We're not stuck. What do? Strong buying up into here. So if I'm trading up here, I'm not trying to catch longs just yet because I know I'm still within this consolidation, and all I'm doing is trying to long into a upper range low, right? So upon seeing that, boom, we get that drop. But these are the days that you can catch these moves because you're like, wait a minute, you're making those reads. You're saying, hold on, you know, where we are now testing a range low from below, and then you get those drops. Basically the highlight trade of the week that really drove this point home of trading outside of consolidation on both a large scale and a small scale. So here is August 5th, Tuesday on the Qs. We have this pre-market range, super clear, right? Here's what we do. I stay out, which is unlike me. I usually trade early after the open, and that was just not working anymore. So here's what we do. There's a pre-market low, pre-market range low right here around that 565. I have that zone marked out. What did I do? I waited. I waited. We went up, then we came down. And the first trade of the day, I did take this short right here off the range high, and I took it down into the range low. Why? Because the quality of the entry was really good. And I didn't get in here, actually. I got in this second entry short, right? Because we made that high. And minimal overlap. This price was not agreed upon up here. We can see that we had a doji to the upside, a hammer to the downside, a clear push down. They then agreed upon price right here for a moment. They spiked higher, another hammer, minimal overlap, another entry short. That's where I get in, right? We chill for a second and then boom, straight to the range low. I think I got out right on this, right when that candle started wicking. I didn't want to play any games, right? So that shows that these two concepts I'm talking about are working together here. So I take it within the range, but I keep waiting because the only thing I'm looking for today on this day is shorts. And so I wait, and at 10:21 is where I got in short. The entry had two of the three bars overlapping, and you can even make an argument all three of them. While it's not like the prettiest entry in the world, if these two bars right here had overlapped this wick as well, that's obviously that you can't take that trade. But because we held under these four wicks right here, which is crazy, and then proceeded to sell aggressively to the downside with minimal overlap of the first bar, that means I'm still good to go. I'm still good to get in and look at what happens. We take this all the way down. I held for about 15 minutes. I held until 10:36. So this bar right here, I unfortunately did leave a little bit on money on the table. Definitely over half of the move was left for other people to enjoy. So that is something I'm going to work on. My exits, but still, I made a ton of money off this. And better yet than the money, I saw proof in a new process. It was waiting for this muck, this garbage to be traded outside of. Although I was fortunate enough to trade this and see this clean move, that did actually lead to a clue that says, wait, we might trade cleanly for the rest of the day. Either way, not being super aggressive in here, just taking clear entries and able to take out this inside move. That was nice, but the real move came once I waited for us to accept below not just what was the low of day, but a pretty significant low that held, like I said, as we can see, overnight right here. Right here. That's 3 times. 4, 5, 6 times. So 6 times. 7 times this low held. When we got to break below it, retest it, and then continue lower, it's a great trade. And that's something I'm going to be looking for almost exclusively going forward. I think this is a great example of how that works in our favor. And you can just see how hard it was to catch before the hand. Like, look, if you had tried this trade, if you had tried this thesis, right, before breaking actually breaking through, let's say you would have gotten right here. You're early. You have to hold for 1, 2, 3, 4 bars before you see anything happening. The moment I got in, we started getting some fun. We had this little spike here, no biggie. The moment I got in, it started working, and there's no accident because the bars are there. It's a language. They're not there for fun. They're not there to be pretty. Oh, you like red or green? No, it's actually a language. When you can see that there's minimal overlap in your entries, it's telling you that these prices are turning around quickly. When they overlap a lot, so as if right here and right here, it's saying, wait, we actually agree upon this zone of buying and selling. This price is agreed upon. It's a language. And so you have to be able to read what the bars are telling you. So that's something I realized this week, and I'm very excited about it. So I really feel like I patched one of the biggest holes in my game, because 90% of my losses, I can surely tell you, are trades that happen inside of ranges that I'm just too early, I'm just too aggressive, and I'm being unaware and really just ignorant of pre-market ranges and intraday ranges, or even higher time frame ranges like the one that we saw earlier that lasted for 3 whole days, right? So comment what you think. This is something that is part of your game already. I would love to talk more about it with you. So leave a comment if this is something that is new to you and you're going to start implementing. Let me know. I'd love to see how it goes for you. See you guys on the next one.